more and more investors believe and come to me. They do not look at what I'm doing. When no one can pay back 20% per month, roughly 240% per annum, on what business are you going to do that? But you are not checking that. You believe I have a super magical wizard power, and you don't counter check what I'm doing with the money you have handed over to me. If it's a bank, they will give away loans. Now, here I do really nothing. But sometimes I may show off something and say I'm earning out of that. Among the first recorded incidents to meet the modern definition of Ponzi scheme were carried out from 1969 to 1872 by Adley in Germany and by Sarah in US in the 1880s through the ladies' deposit. Howe offered solely female clientele an 8% monthly interest rate and then stole the money that the women had invested. Okay. Now, these are good findings. Yeah, there were enough such examples in Sri Lankan illegal depositing mechanism as well. Okay. Now, so this is the article I'm reading out. But among the first recorded incidents to meet the modern definition of Ponzi scheme were carried out. Okay, so the ladies' deposit, and she was eventually discovered and served 3 years in prison. Right, so this is not a new thing. There were enough examples in Sri Lanka and outside the world of this kind of schemes, and they always look at certain set of people who can be easily fooled. Now, those good old days, females were selected mainly because they were just housewives and they don't have much knowledge on day-to-day business activities, but on the households. Today, the situation is different. Females are also involved in almost all activities what men do in business world. She was eventually, okay, right. The Ponzi scheme was also previously described in novels like Charles Dickens, a particular novel. Okay, means what? These schemes are not new. In 1920s, Charles Ponzi, there was a person called Charles Ponzi in Italy. So this is why these schemes are known as Ponzi schemes. Carried out this scheme and became well known throughout the US because of the huge amount of money that he took in. His original scheme was based on the legitimate arbitration on international reply coupons for postage stamps, but he soon began diverting new investors' money to make payments to earlier investors and to himself. That's what I say. First, you show a genuine business, then you pay out the depositors' money back to them in small quantities, and when it becomes a huge fund, I will start to enjoy myself. That's what Charles Ponzi did. So he wanted to make payments to himself as well from others' collected money. Unlike earlier similar schemes, Ponzi gained considerable press coverage both within US and internationally, both while it was being perpetrated and after it collapsed. This notoriety eventually led the type of scheme being named after him. Okay, there were schemes earlier as well, but they were not popular. They were only regional, but this one made it very popular. Charles Ponzi made this scheme very popular in US as well as rest of the European countries. And he got much of media coverage. But one media guy questioned about the authenticity of these deposits. And soon the deposit scheme collapsed and Charles Ponzi was jailed. Now, you have seen this, what we called network marketing. All of a sudden, someone would come to you and say, pay me 50,000 and buy this Mondial or the solar panel or a gold coin, whatever he prefers. Pay me 50,000 and buy this from me. In return, you must attract six such people to invest. The more people down the line, you will get huge paybacks. I think you have heard this. Money Ladder, Gold Quest, and many other names are used by these racketeers. Now look at the numbers. If I start the scheme, I'm on top and I ask 6 people to buy products from me. So let's say if it's 50,000, I'll get 300,000. And I'll give them some small gadgets and say, do it on your own. That's like self-employment, and very soon you will find your accounts are filled with money. Now, I attract 6 people. These 6 people in return attracts another 6. Altogether now I have 36 plus 6, 42 under me. If that 36 attract another 6 each, number is 216. So this is how this scheme moves. And those who enter into this scheme will attract another layer. And they all believe it as a genuine business. But what is the problem? We are not doing any value addition. The only business that can sustain without doing any value addition is antique business. All the other businesses, we add a certain value. But here, we don't add any value. And we believe we can become rich. Okay, now these racketeers always find people with some similar characteristics. Those good old days, they were going behind females because they don't have much knowledge on finance terms and financial literacy. They were just housewives. But today that is not the case. Today, these racketeers look at intelligent, brilliant, especially undergraduates and graduates who just came out of universities and who have very high hopes. Today, the consumerism is very high. You want to show off. And you want to show off with a nice vehicle, a nice mobile, and you want to purchase so many things, but your salary is not enough, especially when you just join to the new job as undergraduate. That's the target market these racketeers are looking at now. And these graduates and undergraduates are very good speakers, public addressing. They are very good in public addressing. That's what they select, because they can in return attract many other people to this network. And today sometimes even a nice term used, network marketing. Now the problem is, if you go down to 13th stage down the line, okay, so I'm on top, 6 people on the second. So likewise, if you go down to the 13th layer, you need 13 billion people in order to sustain this. But we don't have 13 billion people on planet Earth. It's about 7 billion plus. Means what? You cannot sustain this mechanism. And the last layers that joined will find their whole money vanished to thin air. But on the top, by that time, they have enjoyed a lot. These schemes are illegal. Right? So now you should know about the term Ponzi, why Ponzi scheme is used, and why it cannot sustain. Now you know that. So when you are writing answers, you can add some value, say about illegal deposits or these mechanisms. Now you can add some value to your answers. Then finally, moratorium. A moratorium is a temporary suspension of an activity or law until future consideration warrants lifting the suspension, such as if and when the issues that led to moratorium have been resolved. A moratorium may be imposed by a government, by a regulator, or by business. Moratoriums are often imposed in response to temporary financial hardships. For example, a business that has exceeded its budget might place a moratorium on new hiring until the start of its new fiscal year. In legal proceedings, a moratorium can be imposed on an activity such as a debt collection process during a bankruptcy proceeds. Okay, so moratorium is extending your payback period. And I'm asking you to read more on this and get familiar, get updated. Our subject is not a subject that will not evolve. Certain subjects, whether that was taught 200 years ago or now, there won't be much of a difference. But this subject is evolving. You have to get updated on day-to-day basis. For an example, certain parts are constant. What are the principles of insurance? We talked about that. Ubrema fide. Okay. Utmost faith is there forever. Right? You can't make profit out of insurance. So that part is constant. But certain rules, regulations, and new developments are always taking place. So this is why when we looked at past papers in under one topic, 1, 2, 3, very simple. We have heard it in the classroom. The lecturer has discussed in detail. But one question, you have not heard much. Maybe for the very first time. Why? Because you have failed to update. Okay. Now just to check your knowledge on what is happening outside. We have talked about bull market and bear market, especially in stocks related. Okay, in our stock market, what are we experiencing? A bull market or a bear market now? Just tell me, bull or bear? Yeah, we are experiencing a bull market. Okay, so last week, now even today, Daily Mirror, I have seen Super September for CSC. Read this kind of articles. Get updated. We have talked about enough on theoretical areas. Remember, one question can be asked from updates. Right. So as usual, now we will get into our normal business. And I'll give you some questions. Just listen and tell me the answer. You can chat me the answer. A cooperative society cannot, this is MCQ, a cooperative society cannot, number one, accept deposits on demand from members. Number two, lend money to members. Number three, invest money. Number four, pay and charge interest. What is the answer? A cooperative society cannot accept deposits on demand from members. Number one. Yeah, very good. So the answer is number one. Last week we talked about cooperative societies. Very good. Everyone is answering. I'm really happy. Answer is number one. Another question, MCQ. Market intermediaries are licensed by number one, CBSL. Number two, Monetary Board. Number three, SEC. Number four, Registrar of Companies. Yeah. Number three. Correct. Everyone is answering. I'm happy. So that is SEC, Securities Exchange Commission, number three. Venture capital raised fund. Venture capital is raised from number one, the stock exchange. Number 2, banks. Number 3, investment banks. Number 4, wealthy investors. Very good. So this is what I want. Everyone is answering and everyone is correct. So that's from angel investors or wealthy investors. Now, short questions. How do unit trusts raise funds? How do unit trusts raise funds? How do unit trusts raise funds? One simple sentence, a short answer. How do unit trusts raise funds? By no. Yeah, how do you raise funds? You are selling something. We call it financial instrument. Unit trust, what do they sell? Yeah. So your answer is by selling units. What is the role of primary dealers in securities? We have talked about primary dealers. What is the role of primary dealers in securities? Very good. Market making for government securities. Very good. Who is the licensing authority for? Yeah, correct. Who is the licensing authority for pawnbrokers? Who is the licensing authority for pawnbrokers? Yeah, divisional secretariat. Good. Krishni, your answer is okay, but I need answer to get 5 marks. Okay. Now I think I talked about share underwriting. When People's Leasing and Finance PLC wanted to issue shares to the general public, that was in December 2011. Okay, they got the underwriting from NDB Capital. Now the underwriter advised you the timing of the IPO. Okay, now if IPO comes in a dull market, in a bear market, there is a very high possibility the general public will not be interested. Okay, now we had a very long bear phase in Colombo Stock Exchange. During that time, there was not a single IPO because everyone knows if you come up with IPO in a dull market, general public will not subscribe. So underwrite advice on the timing of the IPO. Then they develop the prospectus. Do you know what is prospectus? A booklet. Okay, yeah, a booklet that will contain information. So underwrite involved into that. Then there was something known as road shows. Okay, now road shows mean you are promoting the shares to the investors. So during this IPO process, even the investors in US, Singapore, and some other country were attracted by having seminars in these countries. The net result is very clear. Even now, in the top 20 list of People's Leasing shareholding, not a single individual's name is there. All belong to funds, foreign funds as well as local. Road shows. Then the underwriter advises on pricing of the share. Okay. So we can make the share 180, or we can split that into 10 and say 18 rupees per share. Okay. And they promote. You have to promote. There must be advertising campaign and many other activities that's done by them. Finally, if the general public is not subscribing to certain percentage, whatever that is not subscribed by the general public will be purchased by the share underwriter with the intention of selling again in the secondary market. So that is the duty of underwriting. Let's look at the model answer. Remember, we discussed all these things. Okay. A person who, in connection with the public issue of securities of a listed public company or the company which has applied for the listing, guarantees to purchase unsubscribed securities of such company for a fee or commission, or who negotiate with such company to purchase such securities in the event of offer being not fully subscribed, and includes any person who purchases such issue from the company specifically with the view to offering such securities to the public. Okay, so you have to elaborate on your fact. Okay. Another question from the same area. So we are talking about capital market. Name 4 types of registered market intermediaries and describe how they facilitate operations of the capital market. Okay. Now, when I was asking MCQs, I could see your enthusiastic answers. Everyone want to answer. But when it comes to lengthy answers, 1 or 2, or ideally 3 will answer, others remain silent. But I prefer others also make an attempt. Okay, 5 marks. Try your best to write something on that. Okay, good. Credit rating agencies enabled to assess the credit worthiness of securities issued. Unit trusts. Okay, issue units, stock brokers. Okay, right, good. What else? So the answer, how about margin providers? We have talked about margin providing. I have shown you how in US in 1929, how the stock market was rallied due to margin trading and how margin trading was regulated. Okay, right. So I will read out the answer. Number 1, investment managers. A person who, for a fee or commission, engage in the business of managing a portfolio of listed securities on behalf of an investor, or advise any person on the merits of investing, purchasing, or selling listed securities, but shall not include the licensed managing company of a unit trust. So we have talked about investment managers. Okay, we have talked about a lot of investing funds like Norwegian Petroleum Fund and Qatar Petroleum Fund, okay. State Administration for Foreign Exchange, SAFE, that is of China. So these are funds. So you have investment managers looking into these funds. Margin providers. Okay. So we have talked about slash accounts. I have said Ceylon Bank slash NMR Pereira, this kind of accounts. Margin providers. A person who is in the business of providing credit to investors to purchase securities of listed public companies. Okay, but you can add more, right? So a bank or the finance company that is securitizing an existing share portfolio and providing further loans are margin providers. Then you can describe further. Margin providers comes with an agreement like 50-50, means what? Margin is 50, portfolio value is 50. When that percentage changes, the customer, client, has to either sell out, which we call margin call, or to put more money and maintain 50-50 as agreed. So these things you can add. Underwriters. Any person who in connection with the public issue of securities of a listed public company or the company which has applied for the listing guarantees to purchase unsubscribed securities of such company for a fee or commission, or who negotiates with such company to purchase such securities in the event of the offer being not fully subscribed, and includes any person who purchased such issues from the company specifically with a view to offering such securities to the general public. So that's another one, underwriter. You have mentioned that. Credit rating agencies, you have said that. The person engaged in the business of assessing and evaluating the credit worthiness of any issue of listed securities or securities to be listed with particular regard to the issuer's ability to perform any obligations imposed on the issuers thereon. Then finally you have clearing houses, who performs the function of a clearing house, which shall be responsible for handling all securities deposit with it, and which permits to facilitate the settlement of securities transactions of a licensed stock exchange. Okay, right. Now, last week we talked about some less asked questions, and today I'm coming with another such. So this is on pawning that was tested in March 2018 examination. Once again, the gold price is going up and we see a lot of activities. So you can go through the slides that we used to talk about pawning. Now, first you have few sentences to listen. One main advantage of pawn financing is its ability to grant quick lending facilities with minimum credit, with minimum credit checks and paperwork, which has made pawn loans convenient, efficient, and fast way of obtaining financial assistance in an emergency. So that's how the exam questions are set. First, there is a description of the area. So the area is pawning, and that it has become very popular. It's very quick in lending, less paperwork, minimum credit checks. Okay, so it has become very convenient, efficient, and fast. Question number 1. Name the statute that governs pawning business in Sri Lanka and briefly explain its purpose. Name the statute. Okay. Name the statute that governs pawning business in Sri Lanka and briefly explain its purpose. Okay. Send me your answers. Good. So the ordinance is number 13 of 1942, and the purpose is regulating the pawn industry. So the answer is Pawn Brokers Ordinance number 13 of 1942. Okay. So you can write the complete one. Pawn Brokers Ordinance number 13 of 1942. Purpose: providing the regulation of business of pawnbrokers and for other matters incidental or connected with the same. Okay. Next, explain following terms in relation to pawnbroking business. Explain following terms. Explain following terms. Okay, so the terms are this. So what is pledge? What is pawner? What is pawnbroker? What is pawn ticket? So pawning is not often tested, but it's not a difficult question. Others try to write your answer, then we can look at the answer as well as the next question. I'll give 2 more minutes. Okay, so we look at the answer. Pledge. An article pawned with a pawnbroker. Yes, agreed. Pawner. A person delivering an article for pawn to a pawnbroker. Yes. Number 3, pawnbroker. A person who carries on the business of taking goods in pawn. So agreed with your answers. Number 4, pawn ticket. The receipt issued by a pawnbroker in exchange for an article pawned, bearing particulars of the loan. Good. So I accept your answers. Next one. Certain persons are prohibited from carrying on the business of a pawnbroker as per ordinance. Name 2 such persons or parties. Okay, good. An individual who is not a citizen of Sri Lanka, a foreign company, a foreign firm. So they cannot do pawnbrokering in Sri Lanka. And the last question under pawnbrokering, name 3 offences that could be performed by pawnbrokers as mentioned in the ordinance. Offences of pawnbrokers. Now, the underage is offence, right? The prohibition is on 3 parties: non-Sri Lankans, non-Sri Lankan firms, non-Sri Lankan companies. Okay. Now, what are the offences that can be done by pawnbrokers? Okay, yeah. Pawning for underage person, purchasing from other than public auctions, obtaining articles without pawn ticket. Okay, willfully providing wrong information. Agreed. Taking an article from a person appearing to be under the age of 16 or intoxicated. Taking an article in pawn without giving the pawner the foil of the pawn ticket. Purchasing or taking in pawn or exchange the foil of a pawn ticket issued by another pawnbroker. Employing any servant apparently under the age of 21. Okay, purchasing except at a sale by public auction. Likewise, the list follows. You have, I think I have given you this entire act as a reading material. Okay, right. Now, we'll talk a little bit. After that, once again, I'll give you some questions. Year 2008, 2009 was the worst economic situation in the world after 1929. I have shown you with graphs what happened in 1929. The stock market crashed in a particular day known as Black Thursday. And it took 24 years to the stock market to recover. Means what? If you have deposited 1 million in stock market at the age of 50, you can again have that 1 million only when you reach the age of 75. Who knows what happened in between? Okay, so this is why stock market has become dangerous for senior citizens. But in 2008 and 2009, we have seen some similarities. We have talked about bubbles. In 1929, stock market went up on a bubble rally. When a product is moving up and creating the shape of a bubble, that time the intellectuals started to argue with nice sentence. This plateau seems to be sustainable. There was a good economist those days, Irving Fisher. Irving Fisher, he said, when the stock market escalated to unnecessary heights in 1929, he said, market has reached a permanent plateau. There is no reason for collapsing. But after 3 days, the market had the worst hit and collapsed. Irving Fisher not only lost his money, but also his fame. Okay. Year 2008, latter part, we found, okay, 2008, somewhere in mid, we found in US, the land price, property price is moving up in a valley, creating a bubble. And the oil price in the world started to escalate. Sri Lankan government went and hedged. Means what? If the oil barrel reach a price even more than $120, still Sri Lankan government can buy oil at $120. So even if the oil barrel goes up to $150, still we can buy oil at 120. That is hedging. But the oil price, which made the bubble burst, but still we have to buy at 120. When the price falls even to 70, still you have to buy at 70, 120. There were some other countries and some other airlines who went on hedging. Normally, hedging is an instrument where you can consider of risk aversion, but that itself can be risky. So these are some nice examples. But by 2008, many intellectuals, many economists said, okay, oil price will go further up, and they come up with superb reasoning. The Chinese and Indian middle class has grown to such extent that they use so many vehicles and the demand for oil has gone up. And as long as that demand is there, oil price will further go up. This is not a bubble. This is demand-driven price escalation. Very good explanations. And many believe that. But soon it fell down. Now we are seeing gold price going up, creating bubbles, the shape of bubble, but it may further go up. And some argue, okay, this time people have understood that shares are not good, the other investment options are not good, so gold price will remain in a sustainable plateau. And now we see these days, all of a sudden in Sri Lanka, there's a quick rush of share prices. And it's like almost all shares have got wings. They have started to fly. Today's news articles say stellar September, super September, super September, super performance by CSC. So many nice articles. The more you read these articles, the more you prefer to buy. And you hear a lot of nice winning stories. I purchased Selingko Ceylon development at 10 rupees and now it's 12.50, 25% gain within 2 months when the bank interest rate is 6%. So very soon you will be hearing so many nice stories and that will persuade you to buy shares. Okay. And I have told you when we were discussing about shares, the best time is when nobody's buying. The best time to sell is when everyone is buying. But the majority always do the reverse. And I have given you enough examples. I think I talked about in 1945 when the Japanese started to airbomb Colombo Harbor, many residents living in Colombo for generations sold out their lands and properties in a damn cheap price and started settlements in safe havens like Avisavel, like Esbever, or maybe Nigambu area, believing the Japan will airbomb Colombo from 1944 to 2020 plus. No, that's one-off incident. That's how people behave. They don't think long term. They think the current situation will prevail forever. No, that is not so. Then I gave you another example. When tsunami hit Sri Lanka in year 2004, the land prices of the seabed suddenly dropped down. The people who are living near the seabed started to sell the land and property and move into safe havens like Avisavel, like Aspever. And land price went down. All the news articles talked about the danger of living near the seabed. Those days we had Madam Chandrika Bandaranayakumaratungga as president and Ranil Wickremesinghe as prime minister. So they too started arguing and say the buffer zone of seabed should be 100 meters, the other said 200 meters. So that's what the top level was doing. Means what? The assumption is tsunami will hit Sri Lanka every December from 2004 onward. No, it has hit during Vihara Mahadevi's time, and after so many years after, maybe after thousand years, in 2004. But another tsunami will come, we don't know, maybe another 1,000 odd years ahead. But this is how people behave immediately. Next, we have seen COVID-19 affecting to Sri Lanka after March 11. On March 11th or 12th, all of a sudden schools were closed down for 45 days. Immediately there was a rush in supermarkets. Everyone wanted to flock products. And racks were emptied immediately. Share market started to come down. Right. So even the careful investors said, when the knife is falling, don't catch, you will bleed. Wait until the knife has fallen. And May 11th, the stock market started reopened. Maybe Sri Lanka is the only country that closed down stock market. Whether closed down or not, markets started to go down everywhere in the world. CSC and Nasdaq and whatever the stock, Nike, whatever you call, all shared the same pattern, same way of coming down. And when we started, amazing sales for 3-4 days, then settled. Now knife has fallen and lying on the floor. No one is picking it. And all of a sudden, last week, there was an amazing interest in the market and everyone want to buy shares. And the prices are skyrocketing now. Okay, those who have entered at the right time, they must have got even more than 100%. Right? So that's the risk undertaking. Okay, now I'll first read out a few sentences, then I'll give you the question. Finance companies operate their business through financial intermediation, but their business and risk management environment is different from commercial banks. So the question is, what are the lessons that finance companies can learn from the finance companies crisis in 2008-2009? Very good. Right, so I'm not even Yeah. Now, certain questions, there is only one standard answer. Okay. Now, who is issuing the license for pawn brokering? You can't create answers. Only one answer. But in this kind of questions, remember, you can get marks. There is not one standard answer. Okay. Anyway, I'll read out the model answer, but I'll completely agree with your answer. What are the lessons that finance companies can learn from the finance company crisis in 2008-2009? Need to have adequate capital and liquidity, that's there. Diversification of business, that's there. Need to limit intercompany exposure. I want to tell you about that. Need to limit intercompany exposure. Need to cooperate governance and effective board of directors, you have mentioned. Need for fit and proper key management personnel. Need to minimize related party transactions, okay, intergroup exposure, related party transactions. Need to operate within the applicable regulatory and legal framework. Okay. Now, these companies often create subsidiaries, and there will be a lot of intergroup transactions. Okay. And the intergroup transactions, there can be a lot of possibilities of not doing proper evaluations. Suppose a huge finance company acquire a hotel, and this finance company release 1 billion loan to the refurbishment of this hotel. Whatever it is, for more than 1 year, hotel sector is not performing in Sri Lanka. Now that 1 billion loan given is a big issue. The problem is, if that hotel was not a subsidiary of yours, would you ever give that much loan, that much exposure to a hotel, one single individual hotel? That's related party. That's intergroup exposure. So you have to be careful on that. Okay, another question. Why do finance companies have to face strong competition from banks? What strategies do finance companies adopt to manage their business in the competition with banks? Same question, two parts. Another question, same under the same question. So there are two parts. Okay. One question, 5 marks, but it has 2 areas. Okay, send me your answers. So you have given the answer for 1 and 2, and question number 4. Okay. Finance companies compete with banks for deposits as well as their lending products such as leasing and hire purchase. So banks are doing almost all the activities the finance company is doing. For deposits, the finance company offers slightly higher rate than banks to attract deposits. You have said that. For leasing and hire purchasing, banks are in position to offer attractive rates to customers due inherently lower cost of banks. Finance companies attach various other components to their leasing products such as quick processing, minimum documentation, etc. to compete with banks. Yes. Right. So we are competing each other, and banks have a competitive edge. Therefore, finance companies have to come up with their own strategies. Identify at least 4 major business areas of finance companies and compare with major business areas of commercial banks. Okay. Yes, good. Yeah, Taldu, you have to say deposit rate is slightly higher. Very good. Very good. High purchasing and leasing, they are fighting. Right. Now, another question. Identify at least 4 major business areas, finance companies, and compare them with major business areas of commercial banks. Okay, Taldu, you are making a good attempt. Others also try to send me your answers. Okay. So in MCQs, you are very enthusiastic, but when it comes to lengthy answers, you are not sending much other than 3 students. Okay. Please then send me your answers. Now we will just walk through what we have done so far. Our subject is known as non-banking, NBFI, non-banking financial intermediaries. So first we have to talk about financial intermediaries. I'm just going back and reminding you what we have done so far. Non-banking financial intermediaries are different from banks, but still they are financial intermediaries. Financial intermediaries mean the third party that will collect surpluses from surplus units and offer that as loans to deficit units. So the financial intermediation is the connecting party between the surplus units and deficit units of an economy. Now the problem is this third party is charging an interest. So if you can remove this third party, you can directly do transaction among surplus units and deficit units. But the surplus units and deficit units do not meet on their own. Why? We talked about maturity transformation, risk transformation, and geographically scattered. Okay. Maturity transformation means what? When someone wants to take a loan, he wants to extend repayment as much as possible, whereas depositors prefer not to part with their hard-earned money, and if that happens, they want to part in shorter period. So there's a maturity mismatch. So the third party will collect enough funds from surplus units and hand over that to deficit units, sometimes extending the payback period up to 20 years or more. Because this intermediation can look into different time buckets and different needs of different surpluses and deficits. Further, financial intermediaries are regulated by an independent, therefore there is trust. Yes. Now, disintermediation. Intermediation, I'm intervening and connecting surpluses and deficits. Disintermediation. The third party is not involving and you are allowing surpluses to meet with deficits. Now the problem is disintermediation. Can it take place? So I'm discussing that. One problem was maturity transformation, risk transformation, and geographically scattered. Depositors lie in so many different places, and if you want to have a huge amount as loan, you have to go travel geographically. It's difficult. But disintermediation is becoming possible because of internet. We are connecting wide areas, and you can have credit rating on individuals as well as on companies. Therefore, risk you can evaluate with credit rating, maturity transformation. Yes, maturity transformation you can look with different requirements and some examples like kickstart.com and many other attempts done by crowdfunding. We have discussed about crowdfunding. Crowdfunding means, like in network, say Facebook. Once Sri Lankan Ashoka Handagama, he tried to get funds from different investors in different quantities using Facebook. So you are avoiding the bank, the third party, and you are connecting a lot of different individuals and asking them to fund your project. So at kickstart.com, likewise, there can be a lot of .coms where those who have surplus money will read out the projects offered by different individuals who are in deficit, and they will transfer their money after evaluating credit rating given on these individuals. If that is taking place, we can go for disintermediation. No need to intermediate. Now, there was such a movement, Wonga.com, W-O-N-G-A, Wonga.com. Wonga.com is online based. Right? They earned a lot, but they failed. Right? In Sri Lanka, there are attempts like Cashwagon. Now, what you do is you give loans to individuals directly. Disintermediation still has a lot of obstacles. There is no regulator. There is no proper credit evaluation process, no proper recovery process. So disintermediation is still at a testing stage. Right. Now we were talking about intermediation, connecting different parties. Today we talk about disintermediation possibility because of internet. Right. Now commercial banks became the intermediary manager. Very soon there were shadow banks. You have heard the term shadow boxing. You are fighting with unknown, unseen opponent. You have heard the term shadow cabinet in politics. When the ruling party has a cabinet, the opposition create their own cabinet, which is not really a cabinet, but a shadow. So the moment you get power, you can remove and replace. Non-banking financial sector is known as shadow banks. Okay. Who came up with this term? I have given you that. Paul McCulley, an economist, came up with the term. Okay, so his name is Paul McCulley. He came up with the term shadow banking. So the non-banking financial intermediaries are almost like banks, which what they cannot only do is demand deposits. Other than all the activities of a bank can be done by NBFI sector. So that was known as shadow banking. Then we looked at the fishbone structure in Sri Lanka. The apex is central bank. Then the financial intermediation is divided into two parts: institutions regulated by CBSL of Sri Lanka and institutions not regulated by CBSL. Then the institutions regulated by Sri Lanka are further divided. Those who can accept deposits, those who cannot accept deposits. So commercial banks, licensed commercial banks, licensed finance companies, they can accept, and specialized banks, they can accept deposits. Then comes specialized leasing companies, SLCs. SLCs cannot accept deposits. Then the problem is, if you cannot accept deposits, what are your funding sources? Now think about any institution category. A possible question can be asked: what are your funding source? Okay. Unit trusts, what is the funding source? Primary dealer, what is the funding source? Venture capital, what is the funding source? Licensed finance companies, what is the funding source? Specialized leasing companies, what is the funding source? For exam purpose, the most popular is specialized leasing companies. What are the funding sources? So you already know that. Okay. Then the other side, institutions not regulated by CBSL. Then there are other regulators. Who are they? IBSL, Insurance Board of Sri Lanka. Under that, you know who comes. Insurance companies, insurance brokers, likewise. Then you have SEC, Securities Exchange Commission. Who comes under their purview? By now, you know, different institutions. Credit rating agencies, stock market, stock brokers, stock dealers, then clearing houses, margin providers. So that comes under SEC. Then we looked into different products. Pawning. What is pawning? What is the ordinance? Right. Now, who is the regulator? So whenever a question is given on a particular company category, you can be asked who is the regulator. Right. Now, cooperative societies, who is the regulator? Now I'm asking you that question. Cooperative society, who is the regulator? Last week we said, now what is the regulator of cooperative societies? Yeah, you have to tell me the answer. Department of Cooperative Development. Very good. Department of Cooperative Development. That is the answer. So likewise, each category, who is the regulator? Primary dealer, who is the regulator? Okay, so likewise, right, very good. So likewise, you can be asked questions on the regulator. Now, we are looking at pawning. Pawning is a consumer credit product. Means what? People are not taking or pawning gold articles to do huge development projects like road developments or shipbuilding. They take loans against gold articles for consumer credits, consumer advances. And pawning is the easiest form of credit. Why? Only the articles are evaluated, not the person who is obtaining the loan. The most difficult thing is evaluating the person. And we talked about Campari. Can anyone remember what Campari stands for? We talked about credit evaluation and we used the term Campari. Can anyone remember what Campari means? C stand for what? A stand for what? Yes, C can be, what is the most important thing? I have said C. Under Campari, the most important thing in credit evaluation. Yeah. Collateral stand for in certain categories like, yeah. Very good, Dilshani. That's character, number one. Okay. So it's very difficult to evaluate character of an individual. Very good. Here comes the answer. Campari. Character, ability, margin, purpose, amount, repayment, insurance. Very good. So now we know it's very difficult to do credit evaluation, especially the first one, character. So with CRIB, you can look into good detail, whether he's a willingly pay master or a willingly defaulter. Then ability. So some of them are subjective, some of them are objective. You have to do this process and do the credit evaluation, but that is not required for gold pawning. We are only looking at the article, not at the character. Leasing may be the next easiest because we are evaluating the vehicle plus the person who is obtaining the facility. But first priority is on resaleable marketability of the vehicle. But in leasing, you can even go for other instruments, equipments, but they are not much popular. Okay. Then we looked into unit trusts, then stock brokering. And we talked about bubbles, and by now when I read your answers, I know, yeah, with the upcoming event of individuals to access their own CRIP, determinations can be facilitated. Well, is it? Yes. Since it was mentioned, CRIPs can be accessed online for individuals in a recent news articles. Yes. So individuals can access to their own CRIP. Disintermediation can be facilitated. Yes. Right. Now I'll tell you why, even though I may be able to come up with my own CRIP, and you may come up with your own CRIP. So you're asking a loan from me. Instead of depositing it in a bank, I'll give you the loan looking at your CRIP report. My question is CRIP the only instrument that will reveal your character? Okay. Now remember, most of the bankers very soon get a hands-on experience, and they can read a person by looking at him, by discussing him. Forget about CRIP reports. I'll give a very good example. Why? Okay, theoretically, yes, individual CRIP will help for disintermediation, but I'll give you a counter argument, a real one. One customer has gone to Balangoda branch with a complete set of documents, a huge file, and said, I need 40 million loan, and I'm using this for palm oil manufacturing project. I need 40 million. And all the relevant information are submitted, and this is my file, sir. In addition, I am giving you a security at Dabul. Okay. Now, the bank manager has said, okay, 40 million, that amount is too big for the branch, and the credit evaluation will be done by the head office. And that will take about 2 weeks, unlike a leasing, which you can do within a very short period, say within 1 day. But this is not so. So it will take at least 2 weeks. Even without sending the file to head office, the manager went through the CRIP report of this individual. Perfect. Not a single check return. Superb CRIP report. And this person has taken about 200 million loans within 1 year from different banks. You name a good bank, a good commercial bank in Sri Lanka, he has obtained a loan from them. In addition to that, few finance companies, he has obtained loans. Up-to-date paymaster. That's what the CRIP reveals. So he's very happy, but he used his own hands-on experience. Your basic accounting formula, A equals C plus L, assets equals capital plus liability. This person has taken 200 million loans, and if this 200 million is utilized for anything other than consumption, that is creating an asset. Forget about initial capital of him. C is not aware. Maybe the C is his Dambula land. Then what is about L creating A? 200 million assets must be there. He checked. No, he cannot find such assets. Then he looked at CRIP report again. What has happened? This person is taking loans to settle loans. So he's up-to-date paymaster, right? He has taken loans from every good bank and settling them by taking another loan. His past records are really good, right? Then he looked at the rest of the set of documents. Audited financial statements were there, and he had many subsidiaries. engineers, their background, their qualifications, everything with nice photocopies. But when he went through the audited financial statements, he found a mistake, a very simple mistake. In balance sheet, instead of SHETT, SHEET, it was SHEAT sheet. He suspected, if they are audited, how can that mistake be repeated? Okay, for the accountant, maybe he can miss enough spelling mistakes, but not this one. That's something you are directly looking at. Then he looked at the audit firm, the audited firm. That audit firm he has not heard. He checked with the directory. There is no such firm. He called the mobile number and the contact number of this audit firm. These numbers are not working. That cannot be audit firm. Okay. He rejected the facility after 1 week, saying the head office has rejected without giving any reasons. The same individual has gone to another finance company which has very few branches to Kolpiti branch and got the facility. Okay. Right. So they have looked at the clip and given him the facility. And they soon found the so-called property at Dambulla belongs to Dambulla Rajamaha Vihara and not to this individual. And now this guy is not paying at all. Okay. So disintermediation will be possible, but I doubt. Maybe because I'm too conventional. Okay. Right. So we were talking about these different products. Now, for exam purpose, you have to go by topic. Insurance. Get all the relevant slides, notes, get updated, and do past papers. Check your own answer. Okay. Now, you who belong to modern society would always prefer disintermediation, and you think it's possible. Okay. I who belong to the old generation would say it is not impossible, it's possible, but there'll be a lot of difficulties. Okay. Now there is a book called Heaven's Banker. It's about Islamic banking. Islamic banking is different from our conventional banking, but there are some good lessons from this Islamic financing. They talk about this haram and halal. That's up to them. That's their religion. But gahara, they have a nice word. Means what? If certain things you cannot understand with your existing knowledge without a clear picture, then don't involve into that. Year 2001 in US, everyone was buying shares of IT related companies, and the share market, the share industry of IT related started to go up. Everyone is buying shares of IT related companies. So that was known as .com bubble. Huge rally. The conventional guy, Warren Buffett, was not buying any of these IT related companies. And people started to say, okay, Warren Buffett is too old. Okay, he is no more worth as an investor. And others were rushing to buy IT related stocks. Bill Gates came up to Warren Buffett and gave him a lecture on IT and how IT is useful. Remember, Warren Buffett is not even using a calculator, right? So he's not much interested in IT at all. And after hearing all this, Warren Buffett said, okay, I'll buy a few shares of your company as the tuition fee, but I will not get involved in IT rally. .com bubble. 2001 ended with .com bubble burst. Okay. So I'm not saying financial disintermediation is impossible. It's possible. So for exam purpose, yes, it's possible. Then you can give the reasons why it is becoming possible with the IT, but also talk about non-regulations. Who is going to? Now, CRIP, remember, people can manipulate information, especially when the information is available to me. I know how to manipulate my own information. Right? I'll take loans. When I know that I'm evaluated by my payback history, I take enough loans and pay loans and create a good credibility just to fool banks. If people are doing that, my dear, how can an individual avoid such fooling? Okay, right. Okay, so we have discussed so many areas, and I by now when I see some of your answers, I'm really happy. Okay, so next week will be the last session, and we'll do few questions. After that, a little bit of discussion, and we'll end the entire session. By now you have enough slides, enough material to go through and to prepare. Okay, anything you want to question at this moment? Okay, now please somehow manage to get these model answers with questions. Set 3 hours as your time. Okay, then start writing without looking at the model answers. Test it. Okay? After that, compare your answer with the model answer. MCQs, you can easily give the marks. The rest you can compare. Then you know where you stand. Okay? So with that, you can easily prepare for the exam. But by now, I believe you all are confident of passing this subject. We have covered almost all relevant areas. And certain new things, please get updated, especially on moratorium, QR code. Okay? Now, pyramid is not something new, but moratorium and QR code, please get updated. With that, I'll end today's session. Thank you.